Thank you very much for joining me. Look, in this session, I'm going to be going through a little bit about the Perth property market, and I'm going to present a little bit today around if it's still worth investing. So look, a little bit about the Perth property market at this stage. Look, by the end of this webinar, we're going to be understanding if Perth is still a good investment in 2025. So if you are considering purchasing an investment property, this webinar will be vital for you to understand. We're going to look to understand the market drivers influencing Perth's property prices. So we'll look at some of the leading indicators and see what's happening there. And then we're going to learn how to avoid common investment mistakes in a cooling market. So we'll show you what the signs are, particularly around where the areas in Perth are cooling, if any. So that being said, why should you believe what I got to say? At a higher level, data-driven insights are going to be provided in this webinar today. In my background, 12 years of financial planning experience, 20 years plus of practical property experiencing, purchasing in multiple markets for dozens of clients and myself included. And look, that being said, I've purchased over 40 properties for clients and myself. I'm not an overnight buyer's agent. I have qualifications in financial planning, financial services. I've got a Cert 4 in mortgage broking and finance, and more obviously my certificate 4 in real estate services as well. So you get to know that I at least know what I'm talking about. In this webinar, we're going to be covering the Perth market, where it stands today, how it's changed over the past year, as well as what this current status of the market is. We'll go through some of the growth drivers and risks associated with investing in Perth and understand what's fueling the market and what challenges are ahead. And we'll go through some questions. If you are so kind to submit them, that'd be great. So look, without any further ado, we'll kick off into the first of our session. I'm going to be going through the CoreLogic monthly housing chart pack. Now, in this chart pack, what happens is CoreLogic will release this data on a monthly basis, as the name suggests. It goes through a whole bunch of leading and lagging measures. So it's always a good opportunity to get the current state of the market as a nation and understand where individual cities and regions or regional areas rather lie in respect to each other, and also have a look at some of the leading indicators at a macro level, so at a super high level as well. So look, in terms of Perth, we'll look to understand a little bit how Perth has been performing as a whole in comparison. This chart pack has some great data in it, again, at a macro level. If we have a look at Perth in respect to some of the other capital cities, over the last 3 months, Perth has grown by 1% in comparison to cities like Adelaide and Brisbane, 1.8 and 1.2% respectively. Some of the nation's capitals have been going down over the last few months, more notably Perth at -2% and Sydney -1.4%. I'll go through some of the detail, but housing affordability is a real big issue. Prolonged interest rate hikes or prolonged higher interest rates have really hit, as well as expenses and inflation over the period. And we'll have a look at some of the other data there as well. If we look at the 12-month view, however, Perth 17.1% growth, the best performing out of all the regions and capital cities. And in comparison, Adelaide 12.7, Brisbane 10.4, Melbourne the biggest underperformer or the poorest performer at -3.3 for a 12-month basis when looking at a rolling 12 months. Regional WA, the second best performer at 16.6% there. So if you have a look at the rolling dips, this is where January 2023 was the most recent dip when we look at the combined capitals and combined regions. And we've seen, even with higher interest rates or increasing interest rates, that property prices have been performing when we look at a rolling 12-month basis as well. We'll look at some of the capital cities, how they perform in respect to each other. Perth, again, the rolling quarterly 1%. So you can see here, Perth had a big rolling quarterly increase in comparison to the other capital cities. That is just over 6%. No other capital city has achieved that sort of return in a long time. If we look at the stratified hedonic index, what this does is it breaks up the capital cities into value levels. So if you look at the lowest 25, the middle 50, and the top 25% of values, this is what this area, this is what this graph demonstrates. If we have a look at Sydney, the most expensive properties are performing the poorest, the least expensive properties. And with Melbourne, similar story, 2.7% over the last 3 months. If we have a look at Perth, the top 25 are again the poorest performing in the lower 25. So look, it's almost obvious in a time of housing affordability uh, and inflation and rising interest rates. It almost goes without saying that the cheaper properties are going to be doing the best because they have the most demand and they're more likely to perform better in this day and age, because we're all cash strapped and there's still a demand for property. There's still an undersupply of property. There's fewer new property listings coming to market. So we're more than likely cash strapped as a result, and we're looking for the more valued properties, which are the lower proportion of property values. If we have a look at some of the cycles in particular, look, Sydney, the rolling quarterly change, as we saw previously, is starting to dip. When we look at a 12-month basis, though, it's still in the positive. So there's still some performance. We'll skip straight to Perth here. You can see there, when we look at the rolling quarterly, you can see the rolling quarterly is starting to decline. Now, again, this is one thing that I do say a lot, and past performance isn't an indicator of future performance. Just because an area has been in decline doesn't mean that it will continue to decline. Just because an area has been in incline, so going up, doesn't mean it will continue to incline. It's all around the leading indicators for an area as well. So look, just because this rolling quarterly change or this 12 monthly rolling change has showing a trend, you can see it start to taper off there a little bit. And that being said, we'll see what happens in the months going forward. It could level out, it could go up, but we'll let the leading indicators dictate that for us as well. It was important to note that Perth property prices are at their peak as well. When we have a look at the number of sales in a given area, you can see Perth is one of the lowest performing areas, apart from Hobart in amongst the capital cities. The next lowest is Sydney at 3.6%. So that's the number in sales volumes. If you have a look at the 5-year average here, the monthly sales, it's indicative of that January period. You can see each January period is trending lower. This is the lowest January since January 2020 in terms of the number of sales there. And in addition, you can have a look at the 6-month moving average. The rolling has dipped below the 5-year average there as well. So look, we'll see what that means for the property market in general. In terms of the days on the market, Perth, by far and large, the quickest selling in terms of median days on market. It is taking a little bit longer in comparison to last year. So it's taking longer for properties to sell in Perth. But that being said, it's almost half the time of the next nearest. So we've got Brisbane is the next quickest selling capital city there at 24 days. So that's the average time taken to go from listed to under contract, essentially. So look, that being said, it is still very quick. You can see amongst all the capital cities and region, the median days on market has come up. And again, that could be indicative of that seasonal period in January. We do see properties take longer to sell because typically not much sells over the market. Real estate agents do go on holidays, believe it or not. So that being said, it could be a dip. The last biggest dip for the capitals, it was only about 25 days. It hasn't been this bad since January 2023. And then, we had that hot couple of years when we had ultra low interest rates between July 2020 and January 2023 there as well. In terms of vendor discount, Perth, as you'd imagine, is still relatively hot, but not too far beyond the other capital cities. Perth has moved again to more of a discount. So from January 2024 to January 2025, you are getting more of a discount on Perth properties. Now, just to explain that the discount rate is the difference between the list price and the eventual sale price of the property. So that being said, you know, they are offering more of a discount on properties in Perth. So that could be, you know, either sellers adjusting their expectations or it could be as well the considerations of a cooling market, especially in those hyper growth markets. You know, some sellers might get ahead of themselves and might expect a little bit too much. At the same time, if we're in a cooling market and we're seeing that, you know, prices are starting to cool, we can no longer ask what we were asking for previously. So if you were asking for $1 million in the previous market, the market was cooling, you might need to adjust your expectation, albeit only by a few percentage points that we're seeing now. So look, minus 2.6 to minus 3.2 now. In comparison to the overall country, the combined capitals minus 3.5. So not that big a difference and not that big a spread apart from Darwin at 4.2%, which is actually improving in comparison. In terms of the overall number of listings, again, seasonal. Here in February, we did see a sharp increase in the number of listings, or the number of new listings rather, and that is right on par with the last couple of years as well as the 5-year average. So nothing notable there. In terms of the overall total number of listings, we are on track for the same amount last year. You can see that almost matching and mirroring last year's results, still well below the 5-year average though. You know, we're 12.8% below the overall 5-year average and only slightly more than we were last year. How does Perth compare to that? Perth overall, you can see Perth here, slightly fewer new listings coming to market in comparison to this year. When you have a look at the other capital cities, Adelaide by far the worst. So minus 12% fewer new listings coming to market. And then in terms of overall total number of listings, Perth has actually improved. So that sort of tells you something here. Properties are taking a little bit longer to sell. Properties are having a little bit more of a discount applied to them. There are slightly fewer new listings coming to market, and overall there are more total listings. So that typically means that properties are staying on the market longer as sellers look to adjust their expectations as well. So that's probably something that is important to understand. And then lastly, we'll go through the rental yield from this report as well. So I've gone through this a fair bit. The annual change in rent still relatively high, 7.6% year on year. So rents are actually up 7.6% from what they were receiving last year. In comparison to the national average here, once upon a time, we were up close to the 10% mark in January 2022 and around the 8% mark as recently as January last year. Rents have really cooled with the exception of Perth. Okay, so Perth is still relatively high in comparison to the rest of the capitals. Canberra, the lowest performing rental growth there, and amongst the regional WA in comparison to the national 4.4% there as well. Overall rental yields, if we look nationally, they've remained stable at roughly 3.7%. You know, a little bit of a slight amount of volatility there, a little bit of up and down, but overall 3.7% has been the norm in terms of gross rental yield for the last couple of years. And that's probably because as property prices rise, yields have stayed the same. So the amount of rental growth has kept pace with capital growth as well. And that's why we're seeing that flat rental yield line. If we have a look at Perth, 4.2% rental yield there. So slightly above the national average. In terms of the average for the combined capitals, 3.5%. So if you're looking at capital cities, Perth is one of the better performers. Believe it or not, Sydney is actually the cheapest place to rent a property at 3%. So rentvestors out there, if you're living in Sydney, you might want to consider investing elsewhere. That's all I wanted to go through in that regard. If we have a look at the performance of some of the suburbs here over a 3-month basis, you can see properties to the south and southeast have actually declined in value. So we can see here that City Beach, as an example, has declined, albeit meagerly, 0.5% in the last few months. In the southeast, there in Gosnells, we can see somewhat of a decline or a change, but no growth relatively. 0.1% in Maddington there. So you can see property prices have started to decline over the last period here as well. If we have a look at the current rental value, if we have, let's have a look at the 12-month change actually. So 12-month change, we can see by far and beyond the majority of properties here have grown, or the majority of areas rather have grown by more than 12%, with the exception of the inner city properties. These are the more expensive properties. If we have a look at the median value here, you can see there that that report really rings true about the more valuable areas underperforming in comparison to the undervalued areas, or the lower 25% of properties there. So that just goes to prove the data that we're seeing in that holistic level around the performance of those lower quartile value properties there as well. And then in terms of rent, you can see in terms of median weekly rental income, we can see the rent here is more reasonable in the outer suburbs, as you might expect of any typical capital city. The rent is typically cheaper in those outer areas in terms of dollar value. And then lastly, the rental change. So the rental growth, majority of rental growth, or the biggest proportion of rental growth, has been experienced in that north to northeast area there. So we have a look around some of these areas here. Balcutta rental growth has been 12.4%. If we have a look at Bassendean, 11.4%. So you can really see where the rental growth has been the highest in that area of Perth. We see some to the east here around Cannington and Queen's Park. That's been around 12% rental growth there. So 11.2% over the last period. If we have a look at what that looks like in terms of a dollar value, we can have a look at rental growth in that area. In terms of dollar value, we're looking at about $700 per week in that area there. This is all data from, again, CoreLogic. It's a tool called Mapping the Market. It's a free data source that you can use. Now these are all lagging indicators as well. So just get an understanding of if that how your property, or how the property that you were looking at in that particular area was looking in comparison to the overall market. Let's move into some more of the leading indicators here. We can have a look at the total number of listings on the market. So let's refine this to the last few years in terms of Greater Perth. Now this is SQM research, you can dig deep into the region. So I'm going to let you do that to understand how your particular region that you're looking at is performing. It breaks it into the high level areas here: Northwest Perth, Northeast Perth, Southwest, Southeast Perth. So I'll let you understand how that applies to that particular area. You can see here that Perth has been relatively hot. There's been a large proportion of properties that are selling in under 30 days, or have been on the market for less than 30 days. And then those other properties are selling between 30 and 60, 60 to 90, 90 to 180, and then over 180 days. So you can see here that there's been a relative lull in terms of properties coming to the market. Let me zoom back out again. And then the amount of time that they stay on the market. Now, this could be the sign of a cooling market here. We're seeing more properties listed towards the back end of 2025. And that could be a number of things. It could be people simply stretching their budget to the max, and they're no longer able to afford the property that they purchased 12, 24 months ago because of rising interest rate, inflation, household expenses. And that being said, they now they've reached a breaking point and they now need to list their property on the market. It could be investors as well in the same boat, and they're letting go on their investment properties. So look, that is a sign that more properties are coming onto the market. They haven't been on the market long yet, so it remains to be seen how long these properties will take to sell. At the moment, the total property listings and their overall time frame. There are a couple of extended properties that are on the market. You can see there, in terms of the overall 15,270 in January 2025, less than or just over 10%. 1,500 have been on the market over 180 days. So look, it could be a sign of things to come that Perth is a cooling market at this stage. Important to understand the residential vacancy rates. Now, this will give you an indication of how in demand your rental property is. And that being said, you can see that, Perth has had relatively high vacancy rates between sort of 2012 and 2021 there. That could be as a result of, mining boom peaks and troughs. If we have a look at over the last 5-year period, though, it's been relatively low in comparison. I'll show you what the national average look like. But at the moment, we're sitting at 0.4%, which could simply be an indicator of, again, those seasonal demands. You can see the last few Januaries, we had a couple of troughs there. So it could be seasonal demand. There's not as many rental properties available over the summer because simply, rental property managers aren't there to maintain them. However, that being said, overall, you're by far and large below the national average. If we have a look at nationally, you can see the national vacancy rate we're sitting at around about 1.5% that's December. We're sitting between 1 and 1.5% over the last year. So when we compare that to Perth or even some of the other capital cities like Sydney, we're at about in some cases 1.5 to 2% over the last year. Brisbane, I know, is relatively low. We're sitting around about that, 0.8 to 1%, but Perth looks like it has the lowest vacancy rates across the nation. We're anywhere between 0.4 and 0.8% over the last 12 months. So ultra low vacancy rates in comparison to the national average there. If we have a look at gross rental yields in Perth, we can see that rental yields have been relatively stable. They're hovering around that 4.2% mark there. I'll let you drill into some of the underlying areas there in Perth, and you can even go, suburb and postcode specific using SQM research as well. So that being said, rental yields have been relatively stable. And the rents themselves have been growing, and it looks like it's growing in line with capital growth, which is why we're seeing a stable rental yield as well. So if you have a look at the year in 2021, if we have a look at a typical 3-bedroom home was, around about that 650, 700 mark there. Let's have a look at the beginning of 2021, around about that 650, 700 mark. And then if we have a look at a typical unit, the typical units were around about that 450 to 500 mark. Now, if we have a look, a 2-bedroom unit will get you about $715 a week gross, and a 3-bedroom house almost $1,000 a week. So in terms of the rental yield, we can see like a 35-40% growth over the last few years there as well. I will let you dig into, again, those regional areas and even more specific in terms of postcode if you want. Now, it remains to be seen whether people can actually afford to rent in these properties. So in terms of the overall affluency, we want to get to understand the average household income. So this is important because we need to understand, number one, we need to understand that if we put a tenant in place, can they actually afford the rent that we're charging them? Number one. And then number two, will a prospective purchaser want to buy this property? Can they afford to purchase this property off us down the track? Because properties are unaffordable for whatever reason. So that being said, there is a tool called Microburbs. This is the free version. Now, what we want to do here is we want to understand what the average household income is for given areas. So this will give us an understanding of if people can actually afford to purchase property in that area. So look, if I zoom in on these areas, I should actually be able to get into some of the detail of the underlying areas. So for example here, Padbury, 975 is the average household income. So for the week, so what we can do there is we can get an understanding of, okay, if I'm earning $1,000 a week, $52,000 a year, and then I'm charging, $600 a week in income, is that affordable for a tenant? So typically what we do is we use a benchmark of around 30 to 40%. anything under 30% is deemed affordable. Anything approaching 40% or going over 40% is starting to become unaffordable. Now, in comparison, if we have a look at a couple other capital cities like Melbourne and Sydney, their affordability ratios sit at around, between 55, 60, 65%. So they are, somebody is contributing more than 55, 60, 65% of their average household income to a mortgage in that area, or it's roughly 45, 50% in terms of rent as well. So that being said, it's largely unaffordable in those areas. This is another piece of data that we use. This will help you understand how much supply is coming to market. So we can actually use this to dig into the areas and understand what those household areas are doing in terms of building approvals by government area. So this will give you an understanding of, how many people are actively or how many properties are actively coming to the market. So you'll use this to understand, well, okay, if I'm purchasing in this area, is it going to be flooded tomorrow? And the good thing about this tool as well is it breaks it up in terms of houses, townhouses, apartments, and so forth as well. So you get a bit of an understanding of how much supply is coming to your area as well in terms of total residential approvals. There's a couple other pieces of data that you can use on this website, housingdata.gov.au. We've got household income here. So again, we're looking at affordability and then population change as well. So that's just refreshed on me, but you can zoom in here and get to understand what the residential population change was from 2022, 2023. There's a couple of other pieces of data that you can use here. If you go to profileid.com.au, you can have a look and see what the forecasted population growth is for these areas. Go to population forecast here, and that will give you an understanding. If you look into Perth, that will give you an understanding of the population forecast for Perth. So we know what the supply of property is, and we know how many properties are on the market. We know how long properties are taking to sell. We need to know how many people are coming to the area now. So that being said, we need to get an understanding of demand, and population growth is a great understanding of demand as well. Yes, we can go a little bit more in depth there in terms of population growth. If we have a look at some of the areas within Perth, let's have a look at East Perth, for example, in comparison to Perth overall. You can see that here East Perth has grown in population 7% in 2023 in comparison to 2022. So that in comparison to the benchmark area there is underperforming. So the overall city of Perth has grown bigger. So use this data to get an understanding of how popular your selected area is in comparison to the overall region of Perth. So look, we know that Perth has been a hotspot recently and there's been great population growth. So that being said, you need to understand how your underlying area is performing in comparison to the overall area there as well. Very good. Okay, look, I think I've gone over time here. I've probably waffled on longer than I should. But I really want to thank you, everybody, for joining. Everybody who joined and is watching this video, please don't hesitate to reach out. I have a special gift for you all as well. If you would like to know where the 5 growth locations under $500,000, or 5 of the top growth locations under $500,000 are, they are free for you to find out. Simply claim a copy of my white paper. Visit leveragepropertyadvisors.com.au, /capital growth Jan 2025, all one word. Otherwise, please reach out to me, ask any questions you have, and look forward to catching you in the next webinar. Thanks again, everybody. Have a great night.